Well, hey everybody. This is me typing random letters onto the screen. Even I tend to lose my mind a little bit up here. Let's check and see if the camera's working. You can see inside my crazy universe here. Yep, there I am. Hey, what's up everybody? What's up? It is I am so glad to see everyone here. And we're going to hit the ground running here today. If you don't know where you are, we are in the future. We're looking at times here today. We're looking at predictive based signals because most people, especially most people who aren't doing well, have completely neglected the element of time in trading. And so we've got this really unique experiment set up where we essentially kind of dare you to follow along with some forecasts for a while and take a look and see if what we told you to expect would happen would happen. So we're here for 16 years this May. We have a near perfect Trustpilot rating. And yet we do this very strange thing where we tell you what we believe, that most of the time the moves that are occurring in the market were known in advance. We give you the moves, or rather the times and directions that we're expecting moves for the next 2 days before the webinar, which is today. And we give you very basic rules to trade those times with and follow along and see if it didn't result in net profitable days. So if you've sat there at the end of the day with an account that's completely red and said, I don't understand what I'm doing wrong. If you've sat there and said to yourself, there has to be a better way to do this. I'm sick and tired of giving my money to gurus and mentors and free trial marketing machines, right? Influencers now, that's the big thing. Everyone's got a YouTube channel and they're funded and they've got the receipts and a Photoshop account to prove it. If you've sat there like we did 16 plus years ago and said, hey, maybe I'll pay attention to the people who are consistently making money, not little retail guys, but banks, institutions, BlackRock level stuff. Let's pay attention to when they move, because it's the one thing left they can't fake. This week I learned more than half of all the trades that are taken are now taken in a dark pool, which means more than half of the trades that are taken are invisible. They have access to them first. When the crash starts, they've already sold. When the boom begins, they've already bought. How does that make you feel? To know when you sit down and you're a pretty smart person and you've got a pretty good gear set and a nice computer, you cleaned your office that morning, you brushed your teeth, and the entire deck is stacked against you. So what is it we're saying is possible? We're saying that, hey, when we come out and study when these megalomaniacs are pushing prices higher and lower, we can send a program backwards into the historical data, right? All this talk about AI and quantum development and bada bing, bada boom, this and that. If we just use some good old fashioned programming, some lines of code, and we send it back historically and say, are there times lately in the historical data where when these moves are occurring? We get an answer. And I want you to see when that answer was available to us. Can you see that, Mohammed? Sean, can you see that? The answer was available to us 5 days ago. These pixels, every blue dot, every dark blue dot, every white pixel, every black pixel on the screen was etched into the interweb's memory 5 days ago. And we've been waiting for these signals, for these moments in time for 5 days. Now, that's just one half of the equation, because in addition to that, we've coupled that with a trading system. And I'm going to show you what happened if you trusted what we probably both believe, that somebody somewhere had a plan today, that somebody somewhere was driving prices lower. If you're in my advanced trading room, you kind of know what's going to happen now at the close. We went over it this morning and yesterday. This idea that we're waiting for something to happen in the future can be coupled with a trading system. So let's get right into it. Let me show you what we had going on here today. And I'm almost not even sure which one to start with. Okay, so let's establish legitimacy first. Today's Thursday, February 27th. The E-mini S&P timing signals for the 3-minute chart and for the 5-minute chart have been available for 5 days. Okay, so I need you guys to answer a couple questions for me. Number one, can you verify that it says 545 here, 545 there, 330 here, 330 there, 745, 745, 1245, 1245? Can we say with reasonable certainty that the times that we posted, the directions that we posted 5 days ago, are what's actually on the chart up here today? Okay, this is the legitimacy question. Because if they're not, I'm like everybody else and I'm pulling a fast one on you. That's right, they're the same. They're the exact same. Only before the day ever opened, there were no signals here. There were no bars. It was just time. In that sense, take a look at these signals. And now you'll see coming up on the right-hand side of my chart, the signals for tonight, tomorrow morning, into tomorrow afternoon. I already have them here. So Michael, when I was looking at the charts this morning, this was all I had this morning, a blank slate. The market hadn't opened yet. Someone hadn't walked out onto the stairs and gone. None of that had happened. We just had these times. So when we arrived at these times is when things were particularly interesting for me. Okay. Now, earlier today, just to add even more legitimacy, on our Facebook page, I posted this. We can look at the 3-minute chart, but you can see I had all the times for the rest of the afternoon here that we can compare to make sure that I'm not doing any kind of illegal shenanigans here, right? So let's actually take a look at the 3-minute chart, because there's more signals there to work with. Okay. And now watch. New York Open is at 9:30. That's when whoever's famous that day, whoever's queen for a day, rings the bell. That's the open. And here's the close. 4 o'clock is somewhere over here. And I'll go slow so you can see I'm not trying to pull a fast one on anybody. Now, inside of the rules, I want to read what I told you we were going to hold ourselves accountable to. We'll be showing how the signals can be traded by using one of two simple entry rules called signal with trend or the puncture trade. And then there's a video that describes it. I mention also in the instructions that we'll be using a 1.5 average true range volatility stop for today's demonstration. So we've had that for 5 days. We had the signals, we had the setup. 5 days ago. In a nutshell, what does 1.5 ATR mean? It means that when the candle closes, our stop is 1.5 sizes of a bar on average away. So on the 5-minute chart, if a bar is 20 ticks, our stop is 30 ticks away from that candle. When the market is slowing down or just beginning, if the ATR is 10 ticks, our stop is 15 ticks away. And so the volatility stop allows us to expand and contract our risk. Has nothing to do with time. It's just good common sense risk management. Jill, does that make sense? Mohammed, does that make sense? Sean, does that make sense? The stop is bigger and smaller as the market contracts and expands. You can't use the same stop at 3 o'clock in the afternoon that you can use at 3 o'clock in the morning. It doesn't work that way. Okay, now, when there is a signal in the direction of our moving average, and I've used the same one now for 16 years, I haven't changed it, 120 period EMA. FAQ, is the 120 period EMA the best EMA to use? No. Whatever you use and feel good about is the best one to use. That's the one you want to use. We've just used the same one for so long that I keep it so people don't think I'm changing settings all the time to make the system look good. All right. We enter on the close of the 924 candle at 98, and we exit at 951 for a $20 move. I'm going to put the winners on the top and the losers on the bottom. This is all theoretical, hypothetical, right? Now, the next signal with trend is at 1039. At 1039, we exit at 11 o'clock. That's plus 16. At 11:15, there's some heat. We go halfway to the stop. We touch that moving average. We come all the way down to 12:03. That's plus 75, plus 25, forgive me. 12:45 is our first stop out. They happen. Did you know trading has stops? Ooh, minus 12. This signal at 124 closes above the moving average. And then Jill immediately closes below the moving average. I'm out, minus 2. The next signal with trend is at 221, and I hold that to the opposite time. How many of you get out too early because you have no idea on God's green earth that it's going to go longer? And oh, thank you, Jesus, Muhammad, and the Kwanzaa tree, that it actually went in your direction a little bit. All the time, Jill. The train leaves at 221. We pull in the station at 239. That's your stop. Get out. Why is that time there? Because that's what they usually almost always do lately. Next time is at 3 o'clock. Oh, we're getting into the clutches of the close here. In at 3 o'clock, out by when? 3:18. Where did these times come from? They were published on a web page 5 days ago and exposed to about 20,000 people. 321, let's keep going. Whoa, almost hits our stop. When do we get off the train, Jill? 348. There's another 675. Last train before the close, 354, out by the close, ding, 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 plus 12. Okay. Those are the signals with trend. Signals with trend, SWT, for those of you who have acronymitis. 1, 2, 3, 4, 5, 6, 7, 8, 9 glorious signals with trend. Ha ha ha. Now, what does a puncture look like? A puncture says, hey, this is a buying time and it should go up. But if it keeps going down, that's good for us. if we're looking to sell and we arrive at a time that's supposed to go up, and Jill, it goes down and down and down and down, that's good, because it means the people who are normally buying at this time have said, no me gusta, no bueno. No me gusta, no bueno, and they're gone. So we go short in a puncture right here, right underneath the stop line of the buy signal. Because if we're below the stop of the buy signal, all bets are off. Are there any buyers here? We're like the hyenas when Mufasa is dead. We're running around eating everything. There's no one protecting the Lion King lair. It's just the hyenas and Scar. So we go short there. Now, our stop goes right above the high of the candle that punctured that line. I have a $500 break-even rule, and that one puncture, Jill, went $1,500 in our direction. So I can't count it because it went 1,500, but then it came all the way back to break even. So there's nothing. But if you traded the signal with trend, you had $1,000. If you traded here, you had another $1,000. You paid for the price of the software in 2 trades. No puncture here, no puncture here. Stop out. Uh-oh. Let's take a look at this one up close. Let's go to the videotape. Let's really get in there. Jill, can you see right here where we just nicked that line? We popped right through that saran wrap, Mary. We only had 2 rules based on signals that are 5 days old. Let's see. Remember, Mufasa is dead. There are no lions protecting the gazelles. No one's standing up on the cliff singing. Simba's off running around with Pumbaa making fart noises in the jungle. There's nobody guarding the stop. And what do? We say, thank you very much. I would like to go short here. Where does our stop go? If you're crazy, you put it up here. If you're like me, on the next candle, you move it down lower. And now we begin. And every time it goes lower, Mike, every time it goes lower, we get more money. NinjaTrader brokerage has to send you more money if it goes lower, if you bet that it was going lower. They have to. They're legally obligated to do that. Okay. So now, from the open to the close on what was arguably an insane day. This was an insane day. Not unexpected, but insane. We had how many punctures? Let me get our little drawing tool here, and we'll just put a P. A little P for puncture. I have a P here. I have a puncture here. I had 2 punctures. Okay. Now, what does this address fundamentally? Number 1, Jill, I only have so many times I can trade. I'm limited. So those of you who are very much like me, when you get that tunnel vision and you're sitting here and you're like, I'm going to trade again. I'm going to reverse. I'm going to reverse again. I'm going to try it. No, now I'm going to buy. No, now I'm going to sell. You only have so many times you can trade. And you speak to the inner voice, that demon who's bombastically flailing in your mental background. Trade again, trade again, trade again, trade again. And you go, shh. There's 6 more times. I'm going to make a sandwich. I'm going to take a shower and smell like a human being again. Be quiet. Number 2, when you enter the trade, you know what your risk is. You're not giving it room to breathe. And when that other crazy voice in your head goes, give it more space, give it more space, give it even more space than that, don't let it get hit, give it more space. Shh. The trade either works now or it doesn't. It works now or it doesn't. I'm going to get a cookie. Do you want a cookie? Angry demon voice? No, angry demon voice is good. And then number 3, when it starts to work, the impulse to get out too early has a counterpoint. It has a counterpoint. I want to take my $13 and run. And then the other voice says, yeah, but the trade has 45 minutes to work. All right? There's no pill on hymns that you can take to make your trading last longer. That's pretty funny, actually. Not yet. Maybe soon. So when we add all of these things up, it's 20, 36, 61, 91, 100, 125, 130, 140, let's call it, minus, let's call it 125. There's $125 of potential profit today. Now, you get $50, Michael, for every dollar that you claim in profits. And so anybody with an online calculator that can bang this out for me, I'll do it. 125 times 50. That is a hypothetical gain in your account today of $6,250. What? But how old were the signals? The signals were 5 days old. But the program was trying to warn us that something was probably going to happen again. Something was probably going to happen again. Okay. Now, if you were here last week, how many of you were here last week? Oh, Jill, I don't want to go too fast. Let's go back. Can you explain boxes for when it gets to the sell dot and how you determine entry versus stop loss? Yeah, sure. So Jill, let's look at a blank chart. All right, let's go. Let's look at a chart we haven't seen yet. NQ 1 minute chart. So Jill, back in the 80s, there was this maniac named Wells Wilder. Wells Wilder lived actually not too far up the road from where I live now in North Carolina in Greensboro. And he came up with a bunch of technical indicators that we all use today. Wells Wilder indicators. RSI. If you come here, you'll see he's got, oh, this is, yeah. Average true range, relative strength index, RSI, parabolic stop and reverse, and the DM, the directional movement indicator, are all attributed to Wells Wilder. And so what he was seeking to do was to know how big is a bar now, right? So if we're looking at 5-minute bars, and thanks for asking that question. Most people are thinking it. You're the only one who asked it. If I'm looking at a 5-minute candle, Wells Wilder said, what can I program into an indicator that tells me how far a 5-minute candle is moving right now? So when the market is slow, Jill, a 5-minute candle could be 2.5 points, right? When the market is rocking like it was today, when that Orville Redenbacher popcorn is really going nuts in your microwave and you're scared you're going to burn it, that ATR could be 10 points. Does that make sense so far? Okay, now, Market technicians generally agree on the following. The size of whatever a bar is, let's call it X right now. If your stop is any closer than X away from that bar, you're in what many would consider noise. The background noise of a market just doing market things. The wiggle waggle of a little kid sitting on a couch or at in church at a pew. It's just the wiggles, right? It's just fidgeting. And so if the market moves one X value away, that's just normal. And your stop really shouldn't be in this space. What we do is we go, well, what if we add 1/2 more of X to whatever that distance is? So now that is 1.5 average true range values away from that candle. Now, can you make it lower and lower and lower? Can you use a 1? Can you use a 0.9? Sure. There are guys who jump out of airplanes with wingsuits drinking Red Bulls on the way down to the ground. Knock yourself out. Treat yourself. But if you look at this chart, what you'll see, Jill, is that the size of the bar over time changes. So the average true range of the NQ 1 minute around 2 in the afternoon, those candles were smaller. And then right around 3:10, they're almost double the size that they were at 2 o'clock. Does that make sense? So as the risk increases, the reward increases, right? The candles are moving further. The car is rolling downhill with steam. So in a trending system, there are generally 2 ways to trade, and most of the people who are making money with our program or any other program fall into one of 2 camps: counter trend, the knife catchers, and trend. So if you're trading counter trend, usually the best counter traders in the world that I've met are somewhere around 70% effective with a risk reward ratio of 1 to 1. For every $100 they risk, they make $100. Sometimes a little under that. They make 90 for every 100. The trend trading strategy is around 50%, and the risk reward is 2 to 1. Now, fun fact, when you trade counter trend, on average, you have 5 other tools that are telling you what to do: stop and reverse indicators, higher time frame tools, volume climax things, Bollinger Bands, all sorts of stuff. When people trade trend, they have 1 or 2. So the advantage of the trend is you lose about half of the time, but when you win twice as much, 3 times as much as you made versus what you lost. So having the ATR here keeps us in that trend, where now when 216 comes, I'll highlight that box. We're entering on the close of this candle, but that box now from the top of the candle to here is that big. Later on, as the volatility is increasing, you can visually see that box isn't big enough anymore, is it? This is a whole new box of problems. More risk is required. Then over here at 252, yeah, that's about the right amount of risk. But now this risk here is way too much at 135, right? It's almost twice as much. So as the market is speeding up and slowing down, this is just a component we advise people to take a peek at because it keeps you in the game. So now, you know, if you just look here, signal with trend, candle closes under the moving average, minus 12. Puncture, here we go. The white signal is failing. We're failing with trend. I'm in here, and now I'm out. at 216 plus $70 or $1,400 per contract. $140 if you're trading a micro. 216, there's my risk. Now, Jill, I want to move about twice as far as I was willing to risk, right? So that one's a $43 winner. Here comes the puncture. Through the white line, failure of the buy dot with trend, and I'm in and out with $61 or $1,200 per contract. In and out. Plus 127, that's $2,400 per contract. So does that have a little more definition? You don't have to set it up that way. You can set it up with a fixed number of ticks. Right here, I have that box activated, which says use volatility stop offset. Otherwise, Jill, if you want to go in and try to risk 10 ticks every time, that line will be 10 ticks away or 20 ticks away or whatever your birthday is, number of ticks away, however you pick that number. But for 16 years, that's how we've been showing it in here. Okay. When there's a puncture, there's less risk sometimes because in this instance, right there, when we come through that line, our stop is right above that candle. So there's 1.5 ATR values, and Jill, look, it's less than half the risk on that trade. Yay! Yay! Yay, less than half the risk, yay! But here's my question. Jill, when you look at this chart, does this look like a random market to you? Or does this look like somebody had a plan? Michael, if the blue times were times that we were expecting somebody to do something again, go up or go down. And Muhammad, when we got there, right? It's 10:08 and 10:07. I go, I can't right now, Mom. It's 10:07. I'm expecting a move. And I sit down and I look at my chart. What did it do at 10:08? There they go. There they go, straight up. And so it appears, just like last week, just like the week before, just like the last 16 years, it appears that when we put ourselves in front of these behavior patterns, and Jill, we trust that what we believe is true, that Jamie Dimon, quite possibly one of the most evil people on the planet today, had a plan. And if I, in the morning session of the NASDAQ, put myself in front of those positions, I can get in some trades that are life altering, right? 10:02 is the bottom of the move. Do you understand how crazy that is? From 9:45 until 10:02 is a $276 move. It's $20 per dollar in the NQ. That's $4,000 or $5,000. But look, they had a plan. Somebody's algorithm was programmed to do this. Yeehaw. Now, if you were here last week, Jill, here's the craziest part of the plan. This is the daily chart. Okay? So before we're looking at the market with a microscope, like with a pair of binoculars, and now we're zoomed out and we're looking at those same kinds of signals on a big time frame. What were we expecting to have happen on the 21st of February, 6 days ago? I showed you this signal in the webinar last week. What did I tell you to expect? What did we learn happens about half of the time with the time signals? They come in right around the absolute high or low of the move. So that 9:45 signal on a 1-minute NASDAQ chart, on a daily chart, how far has it fallen? $274. How much long does it have to go? March 10th. That's what's totally crazy. That's what's totally crazy. You were here last week when I showed you the gold signals. How many of you, be honest, went out and bought you some of that Costco gold? You were running through Costco getting your $5 chicken and your $1.50 hot dog with Pepsi. And your wife looked at you, or you looked at your husband and said, you know what we need before we go home? A 1 ounce bar of gold bullion. You know what we need today? A 1 ounce bar of gold bullion. Who does that? I pulled up next to a guy in my cart, and I saw him as he was leaving, and they're checking the coupon, which they tell you they do to make sure you have everything you bought. That's what they say. We're checking your receipt because we want to make sure everything you bought is on there. When the reality is they're looking to see if you threw an HP computer in there on the way past the $9 pizza. And this one guy had a palm tree. I swear to God, a palm tree. And in his cart, he had 2 1-gallon container of 3-gallon containers of milk. And I asked him, I said, which one did you come in here for? If you came in for the palm tree, what made you get the milk? If you came in here for the milk, how did you get a palm tree? Anyway, we watched this signal. If you've been coming to the webinars, you knew when I said the program was telling us gold prices were going to rise. And Jill, you were here when we knew what the signal was warning us for the end of the run to be. Not because of any guru abilities or any black box proprietary influencer, blah, blah, blah. The system said, hey, I looked for you. And this is the day they usually sell gold. Maybe take profit. Maybe only take shorts on your trading time frame for a while. Well, how long does it last? Right here. So can you take an options trade in gold? Can you just load up on puts, which is essentially a really big, long-term trade, betting the market will go down? Can you sell gold short when everyone else is trying to buy it? Yeah. Same thing on Bitcoin. When did we say Bitcoin was going to drop? February 17th. What did I tell you before that? Michael, if you were in my webinar, you remember that I called this setup a black banana setup. How many of you remember last week I told you about the black banana setup? At least one person has to remember the black banana reference. I thought that was good. No? Okay, Thomas remembers. So we'll have a witness. The black banana, Jill was essentially saying this. Hey, Bitcoin is supposed to go up on February 2nd. And Jill, look, they're trying. It's 3 fat guys trying to bring a couch up 14 flights of stairs. Pivot. Pivot. Grab. Turn it sideways. Did it go up? We're never getting this couch upstairs. How many people remember what that pivot reference is from? What television show is the pivot reference from? That's right, Friends. Ross would yell out, pivot. And Bala, the price of Bitcoin could not go up. And so I gave this affectionately, because you remembered it. Somebody remembered it. Mike, I called it the black banana because it was just rotting. It's just rotting on the countertop. It's not developing. It's not growing. And what that tells me See, the longer you use these charts, the more you're going to see the hands of our enemy moving. Jill, Jamie Dimon, is there a D on there? I'm going to give him one. That's funny, actually. Jamie Dimon has no interest in buying any more Bitcoin. Hashtag the party is over. That's what this tells me. And I told everyone here, this is when they pounce. If they're not doing the one thing, if you see the hand of God, lowercase g, moving away from the instrument, if you're listening for them to put their virtual black cards down and buy up every last Bitcoin they can get their hands on, and you just hear cricket, 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 oh, they're selling. They're selling to every poor sap who's trying to buy when they're pushing the couch up the stairs. No one on an institutional level is there. They're gobbling up. Delicious orders. Thank you very much. We're going to kill you on the 17th. How much of this did you put in Bitcoin? All of your life savings? Ooh, ooh. And then it dropped. When's it going to stop? It did right here. 26. Ding. We're there. Guess what? High or low today? My guy right here. I told you all about the black banana. I warned you even. Not because I hate him, and I do. I warned you about the golden child. And I told you that everyone was pulling away. Everyone was pulling away from the commander-in-chief of Doge. And Jill, they're supposed to go up. And here come the fat guys on the couch. Ooh, you got it? Yeah. Oh, hang on. I'm caught on the hand railing. Turn the couch. Did not go up. And what did I tell every one of you in here? They're going to short the pants off of Tesla starting on the 10th. That's where the downtrend starts. Okay, so Jill, let's say you bought Tesla here, you lost a little bit of money, and now this candle closes under the moving average. What do I do now if I'm a Tesla trader? I watch to see. I'm below the moving average. They go through the dot. It's a puncture. Load up on puts. It works on the largest of time frames too. Okay. How high can you go? You can go up to a weekly chart. Oh, by the way, these are lunar signals. These signals directly correlate with the size of the moon in the sky. Everywhere you see a large green dot is a full moon. Everywhere you see a large green dot is a full moon. This one, Jill, is a third quarter phase. Or a moon half empty. And you can see going back months and months and months and months that a lot of the highs and lows appear at these red and green dots. Just wanted to show you that because it's kind of fun. Are you guys up for one off-topic discussion real quick while I'm on this chart, or do you want me to blast past it and look at another signal? Gig, hang on. I see you. Good to see you, by the way. Okay. If I can steal your attention for just a minute, because I think it's important. Tonight, when we go to bed and wake up tomorrow, there's going to be another red dot right here because it's a new moon. A new moon is the absence of light in the sky. So Thomas, what we covered in the room in my live class, and if you're not in my live class, why are you so silly? Please join me in the live class. Thomas, what we looked at was the following. Watch what happens after a new moon on the E-mini S&P on a daily chart. And I'm just going to go one by one. And if it moves up from that point forward, I'm going to draw an arrow from below. And if it moves down, I'm going to draw an arrow from above, right? So gig, everywhere it went up, I'm going to put a white arrow. Gann, when he studied time signals, he looked at what his contemporaries referred to as natural law. He looked at natural law and the laws of nature, if we're using American English, right? So Thomas, what does it do most of the time on the E-mini S&P after a new moon? Goes up. Can you see where that happened after bloodbaths? So Jill, can you see that bloodbath right there? Big down day here, big down day here, couple big down days here, big down days there. I'm just going to put a question mark right here and leave that there for you to look at, because this is time-based too. It's time-based also, because I know when the next signals for the next 100 years are going to be, because math. But Gig, your question earlier, what were the settings? On the daily chart for the ES, it's the only time I use a different setting, and I disclose this publicly. I use a swing strength of 5. I go from calendar to trading days, and then I set it to 1, 2, 3. This is set to 1, 3, 3, which is news to me, but it should be 1, 2, 3. 1, 2, 3, 0, swing strength 5. Okay. Silver, why did I have silver there? Oh, price of silver went down too on the 24th. Okay. All right. So all the other charts that I've given you are just ways to show, when I give you the times in advance, that Jill, most of the time they had a plan. And if we follow those signals in the direction of the trend, use a very basic entry exit system, right? Something you could teach to a 4th grader. You could get in and you could get out, and you know those signals in advance. Now, there are 2 other setups that I teach in my live class. And if you'll indulge me just for a second, I want to review them with you here real quick. We're using the Dow futures. Michael, these are the Dow industrial futures, a slice of all of those stocks in that basket. And again, just to reiterate, where are the times that we were looking for? If you scroll down to Thursday on that page, you'll see the E-mini Dow 3-minute chart. There are the signals, right? And so when we're looking at these signals, let's just verify that the settings are the same. Yep. No, like there are two groups of stocks, right? What stocks are in the S&P 500, right? And so these are all of the stocks that are in the S&P 500. Okay, Amazon is in there. Then you can ask, what stocks are in the Dow Industrial. And the Dow had a bad day too, by the way. And so these are stocks that are in that group. And so when you trade futures, you can trade a slice of them and basically have monstrous leverage. So if you're here today and you're an existing customer, there are two other setups that we teach. You have the signal with trend, you have the puncture, and then we added the aggressive counter trend and the CDOS. The aggressive counter trend, obvious what that spelling does, but CDOS, Jill, it's short for close in the direction of the signal. Close in the direction of the signal. Let me show you what I mean by that. So if you're looking for CDOSes, at 8:39, Jill, the candle closed at the top. It's white. It opened at the bottom and closed at the top. It did not close in the direction of the signal. Neither did the next one or the next one. But Jill, right here, can you see how that candle closes finally in the direction of the signal? This is another way that some people have found is easier for them than the way I've just described. And we actually look for it when we trade the micros in my live class. A CDOS is a really cool way of looking at that. Now at 9 o'clock, we're just going to go through the signals here so you get it. At 9 o'clock, Jill, the candle had closed low. So you have white and blue, there's a mismatch. And then right here at 9:03, the candle closes in the direction of the signal. 9:33, white and blue, white and blue, white and blue, blue, huh, okay. CDOS. I like the word CDOS because it sounds like do-si-do. And if you're Gen X like me, you've been to a square dance with your mom or somebody in elementary school. And what CDOS too, yes. So Jill, if I put those there, I look for the first two and then it expires. So I'll draw two. At each of the signals. 10:15 is a close in the direction of the signal. It's born that way. 11:15, yes or no? That's right, no. 11:18, yes or no? No. 11:21, yes or no? No. What happens next? Right here, CDOS, Cheetos, do-si-dos. That's your entry. 12:03, lunchtime? Sure, just for the sake of argument. That one is a CDOS right out the gate. And then the very next one comes 1, 2, 3, 4, 5, 6, 7 bars later. And then Jill finally, because it's on my screen, right there. Can you guys see the benefit of that? And if I take away the signals from the chart, look at what that reveals. Where do you place the stop loss for a Cheetos? Bali, you made me take the indicator off first. there's two ways. There's the conservative and the aggressive approach. and we'll take a vote to see what you think about each approach. TachEon Time Warp. Dun, 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 dun. TachEon Time Warp. Bala. Let's get rid of these. Hang on. Show the signal dots only. By the way, I'm really proud of you because you're keeping up and you're learning something really hard that on average, 85% of people who sat where you're sitting rejected outright and did not make thousands of dollars today. Fun fact. So, salud. Schlanza. Okay. When you take the trade, there are two schools of thought. Number one, Bala. You measure the last known ATR stop with a rectangle tool. So what we learned with Jill earlier, from the high of this candle to the blue is the last known ATR measurement. Jill's an expert. Ask her if you don't know. And now Bala, when you get to the CDOS or the close in the direction of the trend, put your stop where it would have been if our stop was down here. Bala, does that make sense? So for the first one, it's there. And then for the second one, copy paste, it moves down just a bit. For the next one over here, it is what it was because that's what it was when it started. For the one up here, it's that distance, but now it's up here. For the ones at 1203, it's this distance and then that distance. For the one at 1236, it's just about the same, but a hair lower. Yeah, so that's method number one. Method number two, which I am a big fan of, is preserve precious capital. What do I mean by that? We're going to draw a little tiny thing right here. Let's make it deep pink with a 90%. Mbala, what I am inclined to do after 15 years of trusting these signals is I put my stop right underneath the candle. I put my stop right underneath the candle when it's a buy. And I put it right above the candle when it's a sell. Because I'm a big fan of not giving Jamie Dimon all of my money. Does that make sense? Yeah. Does everyone understand what a close in the direction of the trend means? Okay. That's one of two. Do you want to learn the other one? It's kind of neat. The other one is called the aggressive counter trend. And I think I'm going to start putting this one in our rules. Let me come back and look at the same day. What the aggressive counter trend does is it says, hey, I know I'm above the moving average. Let's go down to a lower time frame so we can see more examples of this. Here we go. What I'm doing in this instance is I'm trying for a buy underneath every one of the counter trend signals, and Bala, I put my stop 2 ticks under the counter trend candles. So I'm trying to buy at 246. I'm trying to buy at 231. I'm trying to buy Let's come back over here. I'm trying to buy at 12.14, and then Bala, can you see right here where it actually works? I use teeny tiny risks on those trades. And so at 10:02 this morning, this is an aggressive counter trend trade. And so I'm looking for all of those instances where the trend is against me and I'm feeling it out with a little tiny stop. So aggressive counter trend trade. Maybe we open up some eyes today, some perceptions. So things I want you to learn today, CDOS, that's going to help. And then aggressive counter trend trade. So again, just kind of perusing around. We had the gold 5-minute chart today. We had the mini Dow that we just looked at here. Again, these guys had a plan, right? These guys had a plan and we caught them following their plan. Let's take a look at Ethereum. This is a cryptocurrency now, right? And without me saying anything, without any of my commentary, Ravel, does this look like Ethereum was traded randomly today? Or does it look like they had a plan? Could we have gotten in front with institutional size order blocks today and made more money than we lost if we followed two very basic setups and knew the times in advance? Yeah, I think so. I think so, right? Just apply the rules. Puncture, signal with trend, aggressive counter trend, puncture, which is a failure, and then a CDOS. And then 440 here is a signal with trend and so on and so forth. So when you know when the times are coming, that's a $38 move in Ethereum. There's your puncture right here, right? Same thing. Buyers aren't there, rotten banana. We just made another $21 on the way down. You want to try to see if that signal is going to go up. My stop goes right below this candle. I lost $5.50. Get in on the CDOS, take it to 1640, and I made $30. Now right here, I go long. My stop is right under that candle. I give back 3. What am I waiting to have happen? I'm waiting for a sell right under this line right here. That's where my sell order is sitting in Ethereum. Because look, Jill, they're trying to bring the couch up the stairs and the fat guys can't do it. I can say it because I'm a fat guy. Ball it, no one at Goldman Sachs is interested in Ethereum going up right now. Just like over here. Nah, we're good. You really don't want to buy a share of Ethereum? It's good. It's shiny. Look, it's connected to the blockchain. Huh? Yeah, no, we're good. We got all the blocks. We have enough blocks. So when we kind of come back out here and we look at this experiment, it's really cool because it opens your eyes to an operating system, to a code, in essence, that no one teaches you in trading elementary school, right? My dad was great. He was married for a long time. He didn't teach me anything about being married or being a dad. He didn't teach me, for example, that my wife wants me to sit quietly next to her for 20 minutes and not say a thing and wait until she's ready to talk about her day. Took me 30 years to figure that out. I also didn't know that there was a restaurant chain called I don't know. And when I asked my wife, where does she want to go to lunch or dinner? That's where she wants to go. If you know where that place is, I don't know. Please tell me so I can take her there. But nobody told me about these time signals, and we had to reverse engineer it ourselves. And so after 2 days of watching these signals and applying a very basic system, you're like, yeah, it worked. And here's where people lose their minds. Well, Michael, I need to know if this will coordinate with my existing methodology. That's a silly thing to say. That's like saying, I don't know if eating vegetables will be healthy for me or not. Let me consult with my nutritionist. Of course it's going to help you. How would knowing the times the market is going to move up or down help you or not help you today? How could it not help you? How could it not work with your existing system? That's the most ridiculous objection anyone has ever raised in a conversation with me. I don't have the money, that's fine, right? I don't trust anyone anymore because I spent too many dollars on stuff like this. That I'll even give you. But I don't know if it's going to line up with my system. Your system stinks. It is a stinky McStinkerston. It stinks because it doesn't tell you when to get in, how long the move is going to last, and in what direction. You're sitting there like this all day. Oh, there's a doji candle. Oh, look, it's a bullish engulfing candle. I don't know what that means, but I think it's good. Oh, ICT, fair value gap. All day you sit there. And at the end of it, you look at your minder and go, how did I lose $18,000? What time is it? Why do I do this every day? It just works. It just works because this is our reality. I have to put my glasses on after crossing my eyes. It was too much. This is my reality. Every day I wake up and there's a guy who basically, yeah, there's no D. This guy basically says, come back to the office even though everyone can work from home because I bought a big building and all the offices are empty and I feel bad. This guy trades over half of his money in a dark pool, and over 80% of the trades are conducted by an algorithm. And you thought, oh, and if he loses some money, his buddies at the Federal Reserve print a pile of it and then hand it to him because if we don't have Jamie Dimon happy, the whole world falls apart. So he literally can't lose money. Every time he breaks a law, he pays $1 in profits, in fines rather. He pays $1 for the fine for every $3. Every $3 he makes, he pays $1 in fines for breaking the law. The last big fine was $1 billion. Their average quarterly profit, I think, is $3 to $5 billion. It's a good gig if you can get it. And you thought you were going to wake up and beat him? It's silly. It's kind of silly. And so we have so much experience. There's over 50 years of experience here in this company between everyone involved. The founders are engineers. All we know how to do is build high quality stuff. And so before you get in your Mazda Miata tomorrow morning and beep, beep, try to race against, Enzo Ferrari's team, why don't you drive in our car? That's all I'm asking. So when you're using our tools, you're basically coming in here, and if it's a daily chart, if it's a 1 minute chart, you can see the signals coming up in the future, right? We covered that. Let's just go through it one more time. If you're looking at a 1 minute chart, if you're looking at a 60-minute chart, You can see the larger movements coming in the future if you're a higher time frame guy. And I can see them now, March 2nd, March 4th, March 5th, March 6th, March 7th. I have the times in advance, ready to go. All of this is blank space, but this blank space is filled with time bombs, things that are going to happen at certain times. And 5 minutes after this webinar, 85% of you will forget everything I'm telling you. You'll be surprised tomorrow when the market rallies 500 points. You'll think it was because Ukraine is giving us all of their cobalt. You'll think it was because Elon Musk fired all the lunch ladies in America. You'll try to ascribe it to some random happenstance and forget that there was a white line or a white dot, an appointment for the market to do that already. People forget. And so as we move higher and higher up, we can go to a daily chart. We can go to a weekly chart if we're really feeling froggy. And look at what the moves were expected to be on a weekly chart with the predictions identical in format and function to the 1 minute chart we were looking at moments ago. How random were any of those runs? How random were any of those sell-offs because of this or that? Tariffs, tariffs, oh. Look at where the market stopped on the weekly chart for the largest stock market in the world. Jill, do you see that? Is that a coincidence to you? Well, Michael's dot just happened to be at the top of the all-time market high. Please. All these monkeys in the forum that have an opinion and love to call me fun names, they don't have a clue. They don't have an answer for this. They don't have an answer for this. Anyway, yeah, if you mark the CDOS on a weekly chart, yes, there's a close in the direction of the signal. There's a close in the direction of the signal. There's a close in the direction of the signal. There's a close in the direction of the signal. There's a close, and there's a close in the direction of the signal, and so on. And right here and here is a close in the direction of the signal. You can trade your 401k, your IRA, grandma's inheritance money. QQQ, SPY, all in long, all in short. Use it on a weekly chart. It's going to do the same thing as it did down here on the 1 minute chart. Bitcoin, Tesla, SPY, gold, oil futures, soybean, corn, wheat, bonds, notes, whatever you're looking at. Oh, and by the way, there's a version of this for TradingView now. We've been looking at the NinjaTrader version, and these were the signals I've been watching all day on Kronos for TradingView. Kronos has fewer features than the Warp version, but it still gives you access to these signals. Here you can see where those shorts were expected to be from 935. And Jill, now off here to the right-hand side, Mohammed, I can see those signals coming up in the future, just like I did with Warp. There's a few limitations with Kronos because of TradingView. They only give you 1 week of historical data, so we can only go back so far. And they only give you a certain number of lines to program in PineScript for your custom tool. So we've maximized, I think we're 2 characters short of the maximum allotted number of characters to program a tool. And we're leveraging every square inch of that 1 week of historical data. So if you're looking at the E-mini S&P, or you're looking at a market like Bitcoin, you can perform those same analyses now and get ahead of the game and see where those shorts and longs are likely to occur. You can also come out and look at, higher time frames and lower time frames and see when those next signals. So basically from 17 o'clock Eastern time to 1930, we're looking for another push down in Bitcoin. Any questions about Kronos versus Warp? Warp is for NinjaTrader. Kronos is for TradingView. Okay, there's I think 4 million active TradingView users. We wanted to have something available for them as opposed to the few 100,000 users inside of NinjaTrader. Okay, coming around the bend, circling here. This is our website. It's pretty awesome. We made a brand new one just for you to make it easy to tool around and learn things. The marketing guys said our logo was lame, so we made a new one. And we just wanted everything to be pretty great for you. If you go to the trading tools section of the website, you'll see that Warp is available here, as well as Kronos underneath it. We'll look at both of them real quick. If you click to learn more, you'll see examples of the different charts and markets that it's there. There's a video down below that talks about how Warp works. And just below that is the pricing. There's a live training room that meets today, yesterday, and Tuesday. We record every session for the archives, and I teach it 9 a.m. to 11 o'clock Tuesday, Wednesday, and Thursday. And here's the recording from earlier today. We'll let that download real quick. But that live room costs $200 a month or $50 a week. And we cover the NASDAQ, the E-mini S&P. We'll look at gold sometimes. We're looking at the large movements, large daily time frames like those new moon signals I was showing you earlier and below. So if that's something you're interested in, great. Otherwise, TachEon Warp, if you click buy now, I'm just going to warn you, this promo code is going away. The team that we're working with now that audited us told us there's no reason for a promo code anymore. But if you're a holdout, WARPOFF, this is going to be in a museum very soon. When you punch warp off, WARPOFF, into the promo code box and hit apply, it still takes $500 off of the price. That's going away. I do not lie. I still remember the Eagle Scout stuff they taught me. I am an Eagle Scout. On my honor, I will do my best to do my duty to God and my country, to obey the Scout law, to help other people at all times, to keep myself physically strong, mentally awake, and morally straight. Morally straight means no lying. The code is going away. If you want it, it's $24.95 for a lifetime license of TachEon Warp. 2 licenses for NinjaTrader, comes with video training archive. Basically, if you come back to the website, you'll see inside of the resource center, now we have a place to log in for support services if you need help. We have the training video archive that teaches you everything you need to know about using Warp. There are links for you to download new versions of your software as they come out. And at the moment, we have a Skype group of users that are sharing their results today. This one from John took a short today and he made over $1,500 with one of his selling signals. Other customers sharing their results. John here, Ken rather, went short for 5 points the other day, and those customers are now in a Skype community. We'll be migrating to a Discord sometime in the second quarter. So you get access to all of that inside of there for $24.95. If you use PayPal Pay Later and you've gotten on good terms with them, they'll let you split the payments out over, I think, as much as 6 months. Now, if you go back to the main page and you say, hey, NinjaTrader is cool, but I don't want to use NinjaTrader anymore. I want to use TradingView. That's a different offering. And again, there's something here I got to warn you about. We started out offering Kronos at a discounted rate, and now we're at $395 a month. it's going to $4.95 a month. This is with the live room. I messed that up. It's going to $2.95 a month, and right now it's $1.95 a month. We were waiting for a certain number of users in the beginning to work with us. All the bugs and the kinks are out. It's loading faster than it ever has and working better than it ever will. It's beautiful. So if you want Kronos, lock it in now and don't cry to me when it goes up next week and say, oh, my grandma made me a cookie and I went over and I ate the cookie, and when I came back, the price was higher. You guys are crooks and thieves and liars. And it's going up, and the promo code is going away. So if you want either of those, I'm not telling you that to threaten you. I just know that the hate mail comes the next week after when people say they didn't know. So if you're ready to begin to use these analyses in your trading with TradingView, you're virtually unlimited by the number of markets you can see, the time frames you can analyze, and the trades that you can get into. Any questions about that? Okay, so on the website, you're going to want to go to the trading tools area. You want to pick Kronos for TradingView or Warp for NinjaTrader, and then the games begin. The games begin. Hey, a little longer than normal, but we learned two things today. We learned about the aggressive counter trend trade, and we learned about the Cheetos trade, the Cetos trade. If we pretend we're Italian, can we say CIDOS is Cheetos? Maybe. I'm going to go with that. I do have some Northern Italian in me. 23andMe, before they sold my genetic information to the Russians in a giant breach of security, told me that about 8% of my DNA is from Italy. So I'm going to say Cheetos from now on. I think it's 8. It might be 12. I got to check. It changes. Signal with trend, puncture, super easy to remember. Aggressive counter trend and close in the direction of the signal might be something that somebody today goes, oh, that's a great idea. So I'm proud of you. May the wind be at your back. May the sun shine upon your handsome, beautiful, cherub-like faces. May the valleys rise up to meet you. May the mountains lay low before us as we move forward. And what I would argue is one of the hardest things anyone sets out to try to do every day, especially in the beginning. It is quite literally you versus you, your good angel and your bad angel on the shoulder every morning, doing the absolute opposite of what you should be doing. This is the hardest thing, I think. I've spoken to neurosurgeons, I've spoken to radiologists, oncologists, airline pilots, truck drivers, people flying fighter jets in the Army. They have all said the same thing. This is one of the hardest things I've ever tried to do. My intelligence doesn't matter. My affluence doesn't matter. My resources don't factor in. It's all up here. And so if you really understood that, you would know how critical it is when I tell you, you can know in the future, prepare, limit the number of trades you take every day, have a smaller stop because it either works now or it doesn't, and a much larger target where you stay in the trade minutes, seconds, hours longer than you would have, overcoming those fight or flight primal basic instincts. If you really understand what trading is, you'll understand how critical and important that is. And if you do, and some of you are here, you've already bought the program, you've left your review for us on trustpilot.com. Thank you for that. And if you feel inclined to, please go back and leave us a review on that site. It really helps other traders figure out how they'll do when they get on the other side, potentially. Thank you. And I hope that I bring something new to these webinars every week. I love you. I'm proud of you. I'm grateful and humble that you came today and listened to me. If you need to and want to reach me, I'll put two pieces of thing in the chat box. Number one, my phone is 336-703-7667. If you can, please text first. Number two is my email, michael@backtothefuturetrading.com. And I reply to every message and I answer the phone every time it rings. So happy to help you out. Have a wonderful evening. For those of you in my live training room, I'll see you again on Tuesday. Otherwise, remember the market you trade is not random. You can know the times in advance that moves are likely to occur. And tomorrow, if you wake up and you stare into the deep abyss, the void, and try to go at your own and flip the coin and see what happens, I got nothing for you. You now know, and knowing is half the battle. Yo, Joe. We'll see you guys later. Take care.